AI fears return. Europe sends mixed signals and Vodafone surprises investors. Let's break down what actually moved the markets this week. This week was all about uncertainty, not just in the economy, but in the data that's supposed to explain it. AI stocks stumbled, investors panicked, Europe flashed both green and red lights, and Vodafone did something it hasn't done in 8 years. Here's everything you need to know. The US government shutdown is finally over, but investors aren't breathing easier. Why? Because the shutdown didn't just delay data, it erased it. Key surveys never happened, October jobs report gone, inflation report missing, even September's employment report will arrive weeks late. The Federal Reserve says policymakers are now driving in the fog. That's Fed speak for rate cuts are no longer guaranteed. Markets had priced in another cut in December. Now that probability has dropped to around 46%. And this data blackout hit at the same moment that AI stocks suddenly looked fragile. Nvidia, Oracle, Palantir all down sharply. Nvidia alone fell 6% ahead of next week's earnings. Investors who rode this year's AI rally are locking in profits. Others are worried the entire AI story has run ahead of reality. And then Michael Burry stepped into the conversation. Yes, that Michael Burry. New filings show he's heavily shorting Nvidia and Palantir. Not only that, he warned that tech firms are extending depreciation schedules on expensive AI hardware in ways that make earnings look smoother than they really are. If he's right, then AI profits may be overstated and valuations may be stretched even further than people think. With limited economic data and shaky AI confidence, the market is suddenly asking, are we in the early stages of a bubble? Investors didn't panic, but they definitely got cautious. Nasdaq had its biggest one-day drop in a month. Credit spreads widened as companies paid more to issue debt. Bitcoin briefly fell below $96,000. Gold paused after a strong run. Nothing crashed. But the mood shifted into defensive mode fast. For investors, less data equals more guesswork. High valuation AI stocks become extra sensitive. If Nvidia disappoints next week, the reaction could be huge. For businesses, uncertainty in Fed policy may delay hiring, expansion, and capital spending. Companies spending heavily on AI infrastructure face a tough squeeze, higher borrowing costs, and rising doubts about AI demand. If the boom cools, firms holding excess chips or building too much data center capacity could get stuck with expensive assets. For consumers, higher for longer interest rates mean mortgages, car loans, and credit cards stay painful. And because the AI boom is global, any correction will ripple across Asia, the US, and Europe. The next few weeks will hinge on Nvidia's earnings, any delayed US data finally coming out, signs of cooling inflation, how fast borrowing costs rise for AI-heavy companies. Until data visibility improves, volatility is here to stay. What happened and why it matters? Fresh Eurostat data paints a mixed picture. Business registrations plus 4%, bankruptcies plus 4.4%. Top sectors for new firms: information and communication plus 6%, construction plus 5.9%, transport plus 5.5%. Top sectors for insolvencies: accommodation and food plus 20.7%, transport 18.7%, finance 14.1%. This is an economy that's growing, but under real pressure. Entrepreneurs are still entering the market, but many consumer-facing sectors are struggling with high costs, weak demand, and tight financing. This dataset is an early warning sign. Europe is not out of the woods. For investors, more startups equal more opportunity, more bankruptcies equal more risk. Sector selection becomes crucial. For businesses, competition is rising while margins are getting squeezed. Hospitality and transport look especially vulnerable. For consumers, more new businesses means more choice, but rising bankruptcies in travel and food services could mean higher prices. For the EU, Registrations support employment and tax revenue, but rising insolvencies may trigger targeted policy support. Globally, if Europe's tech-related sectors continue to grow, foreign investments may follow. If bankruptcies widen, confidence in Europe's recovery could soften. If registrations keep rising, competitive, innovative landscape. If bankruptcies keep rising, consolidation, layoffs, and tighter credit. Winter demand will be the test. The next dataset will reveal whether Europe is rebalancing or slipping into corporate stress. Vodafone shocked markets, raising its dividend for the first time in 8 years. Why now? Because earnings are finally improving. Adjusted earnings plus 6% to 5.73 billion euros. Revenue growth returned in Germany. Strong performance in the UK, Turkey, and Africa. Share price plus 5% on the news. Vodafone also expects to hit the upper end of its profit and cash flow targets. This marks a turning point for a company that has spent years restructuring, cutting debt, and exiting weaker markets. The merger with Three in the UK, creating the country's largest mobile operator, is a key part of that strategy. A dividend hike suggests Vodafone believes the worst is behind it. For investors, this is a credibility signal. If Vodafone keeps delivering, telecom stocks may regain defensive appeal during turbulent markets. For businesses, a stronger Vodafone means more capital for network upgrades. Consolidation in UK telecoms could hurt smaller operators. Now, for consumers, better networks are possible, but reduced competition could push prices higher. For regulators, if profitability rises because of market concentration, antitrust pressure may return. And globally, if Vodafone's rebound works, other telecom giants may copy this playbook, restructuring, merging, and boosting dividends. If revenue momentum holds, especially in Germany, and the Three merger stays on schedule, Vodafone can sustain higher dividends into 2026. If interest rates fall, cash flow improves even more. But execution risk is real. Any delay in integration or return of competitive pressure could derail the rebound. The next 2 quarters will reveal whether this is a true recovery or a short-term bounce. Uncertainty in the US, mixed signals in Europe, and a surprise win in telecoms. This week showed how quickly global markets can shift. As long as data stays murky and AI valuations stay stretched, volatility isn't a bug, it's a feature. Stay tuned for more weekly breakdowns. Thank you so much for watching. If you like this video, please do like and subscribe, and let's build the bridges and not burn them. Goodbye.